It's ClayTrader, and this will be a video chart on ticker symbol ICLD. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Did this one on Friday, so that's where that red line is coming from. And sure enough, today that red line certainly came into play. Today, probably update's not really the right word. More so probably confirmation is the right word to describe this video, because we have confirmation on a couple different fronts. The first front already talked about, but right here at 4 cents, which is that red line. And it turned out to essentially be a double whammy. Not only was there the 4 cent red line, but the other level that I've been talking about too, the purple line, the 50-period simple moving average, you can see that they essentially lined up and were while not the exact same value, they were well within the same vicinity of one another. So in combination with these, not exactly shocking to see that the price did struggle and then ultimately did pull back here a little bit. Now, don't get me wrong, I'm not saying that therefore it's impossible for the price to get up above these areas of resistance. I'm just saying not totally shocking to see that the bulls and price did struggle when it got right up around that area. So case in point, key level of resistance going into tomorrow remains right there at 4 cents. Right, pretty much a little miniature resistance zone from 0.04 up to 0.041. So that's definitely going to be key area of resistance. Now, the one thing that happened today, which was a very good sign from the bullish perspective, is that during the first 30 minutes, the price was falling. And then this will mean a little bit more to those of you that watched the video from Friday, but the price bounced right off that pink line there, which is the famous 200-period simple moving average. And from the long-term perspective, the grand scheme of things, that pink line is the must-hold level, no excuses. Even if you have just a very minor understanding of charts, I'm sure you've heard of the 200-period simple moving average, and you know that when the price is above it, you want to see the price stay above it, assuming, of course, you're bullish. And, the bears tried, but the bulls did a fantastic job of bouncing right off from that level and actually, created a nice bounce throughout the remainder of the day. But as far as, key, big pivot points on the chart, that pink line is a very important one, so good to see that the bulls were able to hold above it today. Still have work to do, obviously, by needing to get through that 0.04 level, but a good start to the week. So we'll have to see how the rest of this week all unfolds. Still 4 days left. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.